Okay, here we go. This is what it's all about, people. Preparing an actual cash budget. So the assumptions are many. I'll just kind of scroll you through those in the PowerPoint, right? There's a whole bunch of assumptions that we need to take into account. So a cash budget isn't really the kind of thing that you can just sort of blindly, you know, do an automated thing with. Okay, so let's just talk about what these assumptions are and then how to show them in a cash budget. Okay, so our first assumption, what's happening over here? Our first assumption is that we require a minimum cash balance of $1,000 in the bank all the time, right? And if it goes below $1,000, then we are able to borrow, and we will automatically borrow at a 12% annual interest rate, and you can only borrow in increments of $1,000, right? So if we have $999 in the bank, we're going to have to borrow $1,000. If we have $5 in the bank, we're going to have to borrow $1,000. Okay, and it's going to cost us 12% interest. That's the first assumption. Okay, our next assumption has to do with depreciation, which we saw in the other schedules, right? So here we are explicitly dealing with that because the depreciation is kind of hidden inside of some of our other calculations about overhead and about our selling and administrative expenses. Right? So that's included in our income statement. We need to back it back out of our cash because remember, depreciation is not a cash expense. Okay, and then the big one. Okay, we are going to buy some new equipment. We are going to buy this new equipment. It's going to cost us $6,500, and we're going to buy it in the first quarter. And we're going to buy it and pay for it in the first quarter, even if that means that we need to borrow some money to keep our cash balance from going below $1,000. As a business advisor, I don't think this is a great plan for paying for capital expenditures, but it's what we are assuming. And then our corporate income taxes of $3,469. So I'm sure you remember every number we calculated in the prior slides, right? Our corporate income taxes were calculated in the previous schedules, and those get paid in the fourth quarter of the year. Okay, and then we've got yet more assumptions to go through. Okay, we started with a beginning cash balance of $5,200, and we are going to round everything to the nearest dollar. Okay, now they tell us. And then there's one other assumption which is not explicitly included here, but it is implied. All other expenses are going to be paid in the quarter in which they are incurred. So all of our labor expenses, etc., are going to be paid as they're incurred. Okay, so we have to take all this and turn it into a cash budget. Okay, so I paused the video for a minute and I pulled up my blank format for the cash budget, and I also made this PowerPoint over here a little bigger so that hopefully you'll be able to see it better. Okay, so let's plow through this. And again, this cash budget is not the kind of thing that you can just sort of blindly go through and duplicate calculations from other sources. We really kind of need to think about what we're doing. So it starts, this is the format of a cash budget. We take our beginning cash balance, add in the cash that's coming in. Okay, so we start with something, we add to it, and we subtract. We've got disbursements for our raw materials. Okay, that's what we calculated up here, our accounts payable. And then everything else, we're going to assume that it was all paid in the quarter in which it was incurred, except for income taxes. And then our equipment, which is an investing activity, okay, that shows up here in the first quarter as a negative, right? We add up all of our disbursements, subtract them from our total cash available, and then we figure out whether we make that $1,000 in the bank or not. If we do, that's fine. If we don't, we have to borrow. We borrow in increments of $1,000, and then when we have the money to pay it back, we go ahead and pay it back. Okay? So let's go ahead and start plugging and chugging, as they say. All right, beginning cash balance, $5,200. We catch it from there. Okay. Our collections on account and our cash sales, we pick up from the schedule up here, our cash receipts budget. Okay, that means we end the first quarter with a total of $15,800 in cash. Okay, so this is how much cash we have available for all of these things that we're spending money on. Now, we picked up our raw materials from up here. Cash disbursements for raw materials. Cash disbursements for direct labor. We're going to have to go over to that other schedule to find the labor schedule. Oops, that's overhead. Our direct labor, $1,272. Our overhead. Now remember, overhead included some depreciation, so we have to add that back in. All right, so let's go pick up our overhead total. And then we are going to adjust that for the depreciation. Okay, and that gives us our $1,741. And likewise, we're going to pick up all of our selling and administrative expenses, which are, where are they? Further on down here. There we go. So our selling and administrative expenses. And we are going to adjust that for depreciation. Right? And then our income taxes, right? We don't pay any income tax until the end, so that's going to be 0. And our equipment, we are going to pick up in the first quarter. And I should make all of these negative just to keep it consistent. Yep. Oh man, what did I do? Negative, raw materials, where'd it go? It's up there. There we go. Right, so this is going to be a negative number there. Make that one negative there. Except that now we have to add back the depreciation. There we go. And this is going to be a negative number here. And we have to add back depreciation. That's 0, and this is a negative number. So our total disbursements here is going to be all of these together, summed up. Okay. So we pulled in $15,800 in cash. We spent $15,777. That means that we have $23 left in the bank. Not a good thing, so we're going to have to borrow. All right. Now, the financing piece, there are ways that you can automate all of this, and if you take an upper level finance class with me, I'll show you how to do that, but for right now we're just going to manually plug this in. All Right, so we know that we are going to have to borrow $1,000. We are not going to repay it. We aren't going to incur any interest. So our total financing is going to be the sum of all of these, $1,000. And what that means is that we are going to have an ending cash balance of $1,023. There it is. Okay? Now, we take this 1,023 and that becomes our beginning cash balance at the beginning of quarter 2. All the rest of these we can pull over. You can do that all the way through to quarter 4 up here. All right, now it's coming up as 0 because I haven't filled out the rest of the spreadsheet yet, but that's okay. Our raw materials purchase and our direct labors purchase, we can pull over. Okay, and I want you to watch what's going to happen with these. Okay, here's this value sign. You know why that happened? Because I did not make the cell reference for the depreciation an absolute cell reference. So if I go ahead and make this an absolute cell reference, and you can go ahead and put that $sign in anywhere, you can put the $sign in front of the B, even if you've got a long name for the cell reference, that's okay. And we'll do the same here with the selling and administrative. Okay. We can pull that all the way over and that will work now. Okay, so those are all calculating properly. I can tell because they're the same number as in the example. Our income taxes are 0 until the 4th quarter, so we'll pick that up. Okay, and our equipment, we're not going to have any more. We're not going to have any more cash disbursement for capital expenditures. So our total disbursements, we can drag that over. Right, so now we have 12,000 cash coming in, 10,000 cash going out. In quarter 3, we still are not calculating all the way because we haven't completed this column here. But so far we're looking good. Our total disbursements were 10,202. So that means that we have $2,600 left over. So we can go ahead and repay that to the tune of negative $1,000 in cash flow. We're going to repay that, and also we need to pay our interest. We need to pay 2 quarters interest, right? So we borrowed it on January 1st, we're assuming, and we're paying it back on June 30th. So that means that we've got 2 quarters of interest, right? So that is a half a year times 12% times the amount that we had to borrow, $60. And of course I forgot to make it negative to indicate a cash outflow, negative $60. Get rid of that decimal point. Right. And so now our total financing, right, we had a negative cash flow associated with our financing cash flows. And that gives us an ending cash balance of $1,611, which now automatically shows up here as our beginning cash balance. Okay, we don't have anything going on here. Everything else here is 0, so we're just going to go ahead and pull across these 2 totals. And the reason that these aren't showing up is because I don't have a total here in this line. Right, so now we have our totals here of $3,700 to the good in quarter 3 and $6,584 to the good at the end of the year, at the end of the quarter. And now we can just go ahead and do our annual totals. So we started with our beginning cash balance of $5,200. We collected a total of $56,000, and what that means is that we have a total of, that is not correct, I am sorry, a total of $62,050 available to us. We spent $22,000 on raw materials, $6,800 on direct labor, $7,852 on overhead, $88,050 on selling and administrative expenses, and $3,400 in taxes, and then $6,500 for a new piece of equipment, meaning that we expended a total of $55,406 in cash. We started with, we took in $62,000 in cash. That means that at the end of the day, we have $6,644 in excess, which gives us our ending cash balance after we take into account the fact that we had to do some financing of $65.84. The difference between $66.44 and $65.84 is the $60 in interest that we had to spend. Okay, so that's how you make a cash budget. Okay, the bottom line is we're going to go a little below in the first quarter. Since we know this through the budgeting process, we can plan to talk to our banker and tell them that we're going to need to borrow a little bit of money. And the thing is about budgeting and planning, right, the last thing anybody wants in business is surprises. So budgeting allows you to look forward and have at least a general sense of what's coming up and what to do about the contingencies that might arise. That, my friends, is the most valuable skill set that you are going to learn in managerial accounting right there. Okay, like I said at the beginning, this is how I've made my living for many, many years. People can make a lot of money doing this kind of work, and you know, I know it's a lot, but I know you all can do it. So get to it. Do your homework.